Yeah.
I read a book by David Lindahl. It's called Emerging Real Estate Markets. And basically what it talked about is about investing in upcoming areas before they become upcoming. Hi, everybody. Welcome back. This is Jose Luiz Morales. This is episode number 77. Today, we've got a very special guest. We have Kristin Sanchez and Desiree Fawn. They are musicians. They own a music group called Danceloud Music and also real estate investors. And today, we're going to be talking about how investing in real estate has allowed them to do their passion, which is music. So welcome to the show, girls. How are you?
Hey, howdy. How you doing?
We're happy to be on.
Yep.
Yeah, I'm excited to have both of you on. So first question is, who are you, each one of you, and how did you get started in real estate?
Well, my name's Kristin Sanchez. How you doing? I've been the realtor for, I feel like, a million years. Not that long. Since 2009, I believe. However long that's been. Math, who knows? Desiree over here. We both met in college. I studied audio engineering and sound system design. She studied music business. And then I guess real estate, when you're born from a big city, you kind of almost feel like you're naturally good at it because of the neighborhoods and just the knowledge of a neighborhood and how you watch things rise or fall just living in it. And there's just a lot of action with real estate in Chicago. So I'm really thankful, to be born here. I think you get a natural knack for it. But really, I did fall into it. Audio engineering doesn't make as much quick cash as real estate can because you're working for a musician. And as you get older and learn the business of the music industry, it's not set up to make much. And if you do make, you have to roll it over onto the next investment. That's the industry. You make $1 million, it takes $1 million to make $1 million, then you have to put it into the new $1 million. But I'll let Desiree.
Yeah, so it's kind of interesting. Kristin joined, she started off as a rental agent kind of right after the recession. So when that happened and, all of a sudden people are paying mortgages on $250,000 and their house is now worth $100,000. Well, what happened here, and I imagine probably what happened nationwide, was like all rentals went up, and
it went from 700 two-bedroom to 1,400 for that same one. I mean, it doubled just depending on the different neighborhood. And each neighborhood, it just progressed too quickly to the point where it's a bit shock value for a lot of the local residents.
But it did, I feel like we both kind of at the time were taking jobs that we were able to leave and go on tour. And all she needed was a Wi-Fi connection to do things in the morning. And, so it was kind of perfect. And that's where we kind of fell into it. And then in time, we'd lived in a neighborhood. Our building had gotten bought, and she had already become a realtor. And we'd kind of been setting ourselves up for a while to, be able to qualify for a loan and
report all things, cash transactions, promoter pay, everything.
So we kind of set ourselves up in that way. And then that's where we'd flipped this place now that we're in, and we were able to make a studio into it and all of that.
So it cuts a lot of costs if you can build and do real estate. It doesn't even matter how much you're doing, just anything for long-term reasons. Because you have to have a way. I mean, first of all, if you have a salary job, there's no way you can leave for at least a month to go on tour. They're just not going to let you do that. You have to work for yourself. So there's only a few options. I think I was trying to choose back in 2009. Should I be a stockbroker or a real estate? I don't know. 7 a.m. to 3 p.m. doesn't sound fun. I'm going to go ahead and go with real estate. That can just be 24/7. Great.
It's funny because when I was deciding what to do, real estate was the best option for me, just because of the freedom that it provided as well, too, just the options.
Freedom.
But also the investment opportunity as well, too, which is obviously why we're talking the opportunities that you come as an agent to help out. Do you feel, and this is for Kristin, do you feel that becoming an agent has actually helped you better transition to the investment side, like having some sort of background on that? Do you feel that that's helped at all?
You have to change your brain to think, because I don't think I think like the average person, the most the typical buyer. I don't think like a typical buyer at all. I'm just a little weird. So I through working in an agency, especially with rentals, you really understand the brain, because it is an understanding. You have to figure out what people want, you know. I was in that movie with Mel Gibson. Anyway, but I mean, sconces, something so small, the smallest details make the biggest differences, you know. And I'm not even a visual person by my own nature. I wear the same type of clothes every day. I don't know. I can barely match colors. You know, I don't have that visual that a lot of, what do you call it, teachers have. But it's important to get that brain and work in the numbers aspect to it, because everything pretty can ruin your numbers, you know. Yeah. So you have to be almost creative and with your numbers and design, which is where I think being an artist, always working on a budget or no budget, really helps out. It's more like real estate does help with music, but in a way, music really helps real estate, because we can creatively figure out problems that it takes 5 plumbers that they can't figure out the problem, but all of a sudden we figure out the winning solution. Yep. Yeah.
I also think that there's a motivation behind it as well too. You like, whenever you're the person that's money's on the line, it's like your brain automatically shifts into, okay, like we have to solve this. So Desiree, why don't you tell us about the first project that you guys did? What did that look like? What were the numbers like? And did you make a profit on it as well too?
So technically it was our mobile condo, but we're going to skip that because the numbers will make no sense whatsoever. It was built for a tour bus.
But no, actually, we came out and everything was good.
Oh, actually, yeah. I mean,
because it paid for itself.
Was actually in the positive. So, but that's a rare occasion.
In 2012, we built a tour bus, and I think that was before I moved to Chicago. I was working as like an electrician assistant
before the van life hashtag.
And so, so we ended up building the bus, and then when we had bought this house, it's a 2-unit plus garden. And my grandpa had a defibrillator, and I'd worked in his wood shop with him my whole life. And so he was now unable to use a lot of his tools. So he'd like, come down, bring your bus down. I'm going to load it up with all my tools. This will help you build. And then I end up realizing every drop of sweat's worth $50. And so we started framing out all the walls. And when I started working hand in hand with all of the tradespeople, they started to like, take us more seriously and was like, hey, we'll help you and we'll give you great advice. And we
bought them Subway sandwiches, and all of a sudden we know everything that's going on with our GC, everything,
for good and for bad,
right?
And so we
look like baits, in a typical world. We can be taken advantage of easily. I mean, I can't say that because we're women, but in a way it does frighten us a little bit more. We had to learn in a boot camp style way because we did not have a trustworthy GC. And it was all because of our great subs that she hired, the GC.
Yeah, so it worked out really well. It was kind of boot camp. We did start to manage the project more and more. And the thing is, I feel like if you're a flipper, or if any kind of a rehabber and holder, you really need, the city will come in and check all the permits and make sure everything's good. But you need to kind of keep an eye on things, because even when the city came in to check the electrical permit, we knew there was a live wire behind the wall that they left open, no cap, nothing at the end. It was just like, and I pointed it out and was, and then here comes another inspection after that, because it was like these little things. Inspectors, they'll run through. Sometimes you get the ones that like go through with like a fine comb.
Tired that day.
You never know the circumstance of being a human. So in that way, it was kind of from that I started to look into a college up here, and I plan on taking courses for construction management and learning how to read blueprints and safety and
with bigger investments, when you kind of need that. But with this particular first investment, the numbers here, this is Humboldt Park. So Humboldt Park is one of the biggest places to rehab something in Chicago now that everything's rehabbed.
And it's all over HGTV.
Right. That's like the main neighborhood in HGTV right now is Bucktown or Humboldt Park. And we bought it full of mold, but as they say, mold is gold. Do not be scared. We bought this on Christmas. So that was another thing. I wanted to go Thanksgiving to Super Bowl with the time frame. We did an FHA loan. I mean, I just used my IRA from my children's fitness job I had at the time. I worked on weekends there for 15 years. So I had a little small chunk of, I mean, this is not much, it's FHA loan. And the property with mold, full of mold, it should have been, I believe, 160 to 180 at the time. But we got it at 100, 98.9 to be exact. And then we put 122 of a rehab into it using a rehab loan, 401k. I believe
it was like $8,000 down. That's how much it cost us each $4,000 to get it. And then through all that, we end up not going over our contingency because we end up doing a lot of work. And yeah,
I believe you were 4 G's under budget.
But this is where, like, I feel like being an artist helps real estate. Is typically artists will go and they're kind of the natural pioneers. You know, they're going to go into a neighborhood that is like up and coming, or like going to become up and coming.
Starbucks.
Yeah, you know, and they'll have kind of a vibe of a neighborhood, and we kept seeing it in every neighborhood we were living in. You know, our last neighborhood, we kind of got gentrified out, and we were there in between 5 to 10 years in advance. So kind of watch where the artists live, because that's going to be the next neighborhood to pop. And I believe that. And so I think that's where, you know, we kind of pioneered into this neighborhood. Now 5 years later, I mean, how much we spent, what 220, and now thinking,
you know, we could go up to 425 if we put something fancier in our kitchen now.
Yeah, so it's popped in 5 years.
So did you purchase this almost like with a first-time home buyer program? And was it a renovation product as well too? Like, meaning like you get money from them. So a lot of people don't actually know about this. And a lot of people,
there was no grants though. It wasn't the first-time home buyers program with that certain grant.
It's like an FHA, right? Like an FHA program, like a 3.5% down type of program. Okay, cool. So for the viewers watching, if you're interested in, can I hear an echo? Do you hear an echo at all? No?
It could be because we have you on, do you hear yourself as an echo?
Yeah, I do.
Okay, because it's coming out of the headphone. You should be able to a little bit. If we change our settings, it'll go away and it'll switch it where your voice comes out of our headphones. But it might, I noticed, because with this pull down menu with this Blvd TV, it'll
okay. Let's just continue. Yeah, so what I was saying is that what about now? Let me see. Hello.
Check.
Yeah, I no longer hear myself.
Okay, great.
I lowered the volume on the speaker.
Awesome. So what I was saying is that there are first-time home buyer programs out there that will allow you to purchase with as little as 3.5% down. And then also there are programs out there that you can buy a fixer and get rehab money to fix the property, which it sounds like that's something that you guys got. I remember there was a property that was cash only, but with the rehab loan, you can actually purchase it as long as the seller is open to the possibility of doing the rehab loan, which you may be able to pay a little bit more than the cash person. So that's kind of cool. Do you still own that property, or is that something that you guys have since sold at that time?
Sitting it right now.
Yeah, our tenants pay our mortgage. They pay our whole pity.
That's awesome.
Yeah.
Here's something that you said at the very beginning, and I don't think like a lot of self-employed people capture this, especially in cash transactions. Like, I've dealt with barbers, I've dealt with people that make a lot of money cash, but a lot of them don't realize that by them not reporting everything, basically they are hurting themselves because they're not able to qualify. And it sounds like that was one of the things that early on you said, no, that's not going to be us. And we are going to report everything, even the cash transactions. We're okay with paying taxes. So because you made that decision, you were able to buy with $8,000 down. How much would you say you have in equity now in that property?
I mean, right now our value is, 425 at max. I think it go a little bit higher next year, maybe 450.
So like 160
so
plus.
Have 200 left in the balance. So I mean, we've doubled since.
Yeah,
so basically like 200 to 250 basically in equity.
Because I believe that you should earn both. Your mailbox money from rent, but people forget about the equity all the time. They'll get in a neighborhood that's already at its peak. You know, there's no rise whatsoever. And they're thinking they're making a ton of cash because it's coming into their mailbox. But yet the equity has not, it has not been touched. It's stable. It's the same. No rise. You know, so, I don't understand that, why people do that often. It's very often.
The point that I wanted to make here is a lot of people think that they're saving money in taxes by not doing that, but now you're sitting on $250,000 of equity. So they're walking over dollars to get pennies, basically, is what they're doing. When if you think about it long term, you're able to borrow money. You bought it with $8,000 down. Now you have $250,000 in equity versus, I want to save $10,000 in taxes or $15,000 in taxes, you know?
Right. So it works like stocks. I mean, even if we have to change cities, because Chicago has the benefit of many neighborhoods where you can watch the rise, and there's a lot of options watching the rise of each. And you can even pick different cities that are top 10, the last 10 years on the rise. You know, I'm looking at Indianapolis, Fort Wayne. There's different tax bracket, tax amounts too that make such a difference. But there's no point when Chicago runs out, they're going to run. I mean, you're going to now branch into the suburbs, but it'll take a little bit for that. So just like Brooklyn, at one point it was affordable, you know, but now it's completely unaffordable compared to Chicago.
Yeah. And to be clear, you know, when we were setting ourselves up for 2 years, we spent about $10,000 each year on taxes, and the loan we qualified for, we didn't even use it all. Like, you don't have to. If they say you have $325 to spend, it doesn't mean you have to spend that, you know, because of what kind of mortgage do you want? So that was the thing. We kept it down. We wanted under $225.
Right. Claiming your rental income. A lot of first time investors, I've noticed that they just everyone's scared to claim income. Like, I don't want to pay to cover. But it's like, no, they're going to give you opportunity if you just do the right thing, you know?
I've heard this saying, and I don't know if you can relate, but they say that the bank is your best partner. The reason it's your best partner is they will loan you 97%, or they will partner up with you. They will put up 97% of the money. You only have to put 3% up, and they allow you to make all of the decisions on the property.
Yeah,
the bank worked on our side actually with having a bad contractor. It was the bank in the city actually was a big help.
Contractor a million times before.
They're the one dispersing the money, so it was like, well, no, this wasn't done right. This wasn't, you know, the bank was the one that we were hand in hand with the rehab, and they were super helpful.
So I think the product that you guys are referring to is the FHA 203K program. Is that right?
Yeah, I call it 401.
203K.
Yeah, that's right.
Yeah. So if somebody's curious about how to get a loan, they'll let you borrow money. They'll help you manage the construction of it. And then you're basically buying a fixer, which means more than likely once you get done with everything, more than likely you'll be sitting on equity, and you'll get to fix it up however you want, basically.
Correct. You can almost, I mean, I know it's FHA, so you have to give some time to refinance. But when you do, you're going to, have that second thing everyone forgets about, which is equity. Another way to earn money. Yeah.
So it's basically like doing a flip.
It's quick. You can walk into a 90 Gs pretty quickly.
And get insurance that we have to pay.
What is that? The PMI. You can finance out your PMI too.
Yeah. It's funny. I had a client do that same exact product. And by the time they got done with it, maybe like 6 months later, they refinanced it, got rid of the mortgage insurance because now they had 20% equity in the deal. And they got to rehab the property exactly the way that they wanted to rehab. You touched on another thing, and I don't know if our viewers caught that, but you talked about how you invested in an emerging neighborhood, a neighborhood that is coming up.
Yeah.
I read a book by David Lindahl. It's called Emerging Real Estate Markets. And basically what it talked about is about investing in upcoming areas before they become upcoming. Like, where did this idea pop in your head, or how did both of you like realize this? Because I didn't even think about it until I read this book, but then I started noticing around my city. Like, I started noticing neighborhoods being gentrified. I started noticing certain neighborhoods, new construction going into there. And it almost like there's like a good neighborhood, a good neighborhood, and a bad neighborhood in the middle. And they almost like merge towards each other and make that bad neighborhood into a good neighborhood because they're emerging that way. So how did that idea come to mind for both of you?
It's almost like just living life in Chicago. If you can't see it, you are blind.
Well, I don't know. Honestly, I think it's the artist factor of like, you kind of get a vibe from an area, you know, and then it's like, well, this is affordable and I could do my art here. And I would honestly watch where the artists move to. And because every neighborhood here, Wicker Park used to be a really big artist neighborhood. So when we moved into Bucktown, people are like, oh, you're by Western Avenue. Do you hear gunshots? And we're like, I don't know. It could be fireworks. And then, you know, we moved to Kimball and it was like, here, we're going further west. Oh my gosh, you guys live by Kimball. Like, do you hear gunshots? And it was like, I don't know. It could be fireworks. And then everything evolved around us, you know?
Yeah. So we're just going westbound. So it just went from Western, and then now Western, it's like, there's no question about it. They're not gonna ask you about gunshots or fireworks around Western. Maybe nowadays with pandemic, who knows? But it just further west. The next one is gonna be Pulaski. So.
Yeah, one thing we'd like have joked around about is like if you get into like the time of rush hour and the amount of joggers you see in that time of rush hour, each jogger is worth 100,000. And you can kind of gauge the, a neighborhood. And it was just kind of this ongoing joke we had for years.
A joke. Yeah. Because Chicago is, we've got a lot of culture here, and then they do segregate themselves, for whatever reasons. The Metro train has a lot to do with it in the early 1900, I don't know when Metro started, but there was a lot of purposeful building with the city architects back in the early 1900s. And it does work. Well, it does work, but as neighborhoods grow and merge, what's funny is that the original owners, if they're smart, they will then be the new landlords and bank off of the equity and the rental income. As long as you just stay smart, pull the loan if you want to buy what you're renting in, don't leave yourself stuck where you can't purchase. I mean, if you love your home and you don't want to be gentrified out, the first thing to do is save the minute you see it. You know what I mean? And put it in the bank every month so that you have a flow that you can then get a loan, because whatever rent you're paying now, I mean, even sign up as a renter for your credit to rise. There's lots of credit reporting agencies now, like avail.com, I heard does that now, where you can report your rent to the credit bureaus. You can do a credit score jump pretty quickly if you let the three associations know, the bureaus.
Another interesting thing is, like, I just realized right now is we happen to buy two places right next to two parks. Like, we're a couple blocks away from one of the largest parks in the city. And then the second property is still not far from that same park, but also has a really tiny park across the street from it, And so that's where, like, I don't know how it is in California.
Where you can guess the rise, per neighborhood, you see a park. Obviously, if it's one of the significant parks in the city, you can follow outside of that park will grow faster than not being next to a park. And it's the same thing with the train, but I don't know how LA works if it's the ocean. I don't know that you have to be ocean and highways you have to be close to watch the rapid increase start from those points, but in Chicago it's really easy. It's the train lines, the farther you go from downtown is the cheaper it goes. And it just it's like a time warp, you could just watch what will happen in the future.
Yeah, we're located in between Santa Barbara and Los Angeles. So my thoughts are like north of Los Angeles, like north of Santa Monica, and south of Santa Barbara. So my thoughts are these two markets are not saturated, but they've grown tremendously. So my feeling is that the same thing is going to happen in Ventura County, because I'm seeing a lot of the construction already happening. I'm seeing the high rises starting to come in. So I'm buying as much as I possibly can. Here's what I was going to ask you. So you went directly into multi-unit, or was your first deal a single family? And if you went into multi-unit, why multi-unit versus a single family? And once again, how did this idea of multi-unit come up versus?
Okay, so Chicago, I believe, just from random researching through the years, that it is known to profit very well from 2 to 4 unit residential properties. Now, the reason why it does so well is that there's a lot of single families, a lot of Sears homes, in fact, that were built just for the average mansion for the early 1900 pioneer. So this mansion then converted to apartments. So all the early 1900 mansions in Chicago are now two bed, 1 bath apartments. So plus basement, which is the in-law arrangement illegal unit that everyone talks about. So that's kind of bad, but the reason why they make a lot of money is because of that illegal unit, or, you know, which the permits and zoning is now changing. They're going to start upzoning just to get that permit money.
We typically duplex down.
Yeah, that would be the correct way to do it, is just to duplex down. And you're going to get, you know, if you, depending on your design and finishes, you can get equal to or even more if you do it as a duplex down, which is the legal way to do the in-law arrangement. With our first house, we bought it at the price of a single family, but we are zoned for 2 units. Perfect. So if you're a smart realtor, you can list it 2 different ways. I've only seen not even a handful of agents do it the right way. They have always sold it incorrectly when there are actual front and rear entrances, and it could be a legal 2 unit. It's already zoned for it. They have 2 meters, but the realtor just doesn't know, and he sells it at the price of a single family. So we got it at that.
It was actually grandfathered in as a multi, 2 unit post garden.
With the FHA loan, though, we had to convert it down to a single family and then convert back to a 2 unit. Now, I can only do that for owner occupied. Okay, so we do occupy. This is our primary, you know, and this is our forever home. But that would be, you know, you could it's totally fine to just upzone it, and you're already zoned for it. So you don't have to technically upzone it. It's already good to go. You just have to have the meters in the front and rear entrances and inspected with the certificate by the city, and you're good to go with that certificate.
So there's 2 lessons there. One is you can find opportunities listed on the open market that are marketed incorrectly.
Yes.
I've capitalized on that tremendously. So people are like, there's no good deals. But like I'll give you an example. We bought an 11 unit and an agent from LA came to list it, and the agent wasn't familiar with the values down here. So he listed it like substantially below market value. It went in a bidding war because it was so underpriced. I think I paid $100,000 more than what it was, but it was still a good deal. The seller
did you do the escalation clause
with your
so we do something called it's called qualifying the listing agent. And we basically, part of the process when we submit offers, we're in constant contact with the listing agent, and we're asking them like questions, like, for example, like, okay, like, do you have any offers above X price? Do you have any offers above this? If I wrote the offer at Y, would I be the highest offer? And just asking, like, basically, by the time I got done talking to the agent, I knew exactly where I needed to be to basically submit the offer the right way. So it wasn't like an escalation clause. It was off the record. He basically told me, Jose, if you come up an extra 10,000, we really like the way that you work. We like your reputation. We'll go with your offer. And that's what we did. We ended up coming an extra 10,000. And that's the stuff sometimes people don't see in the background, that if you have the right relationships, or if you are polite, somewhat persistent, you can basically make a deal work where 17 other people missed out on that property. So that's one of the lessons that I got from that statement. The other thing that I got from that statement, I overlooked it, so we'll forget about it.
And I do think that, you know, if you're serious about a place, we found out with this property, a bunch of people put bids on it, but they were just lowballing. And it was like, if you're really serious about something, like, give a realistic offer, because I believe that negotiations should be something that both parties leave happy, you know. And yeah, you could have got them down another 10 or what, you know, and pushed your way through.
Don't let your emotions get in the way.
Yeah. Think about it. Like, what is a couple $1,000s? You're going to lose a deal because $2,000 when it's like you're talking $250,000, you know. So things like that.
I see so many people do that. It's like, now, are you guys worried that you guys paid an extra $10,000 for that property when you're sitting on $250,000 in equity?
Right.
Doesn't matter.
You can see it when that offer comes in. It's from usually a person that owns property nearby that's been there for a long time. They're not used to the rapid rise. I mean, it's due to the population. We're the babies of the baby boomers. I mean, that's you know,
because even with this first property, it was when we looked at it, it was listed at 106. And then the day that we went to submit, they dropped, and we had already said we're going to match list. We want it. And so that's where it was. It was like, all right, the day it happened to drop, we put the offer in and we just matched lists. And I was like, this is it. We believe it's worth it. And it was great. It was a great gamble and it worked. And then for our second property, you know, we gave him an offer. It was like, it was listed at 250. It should have been 350.
And key factor, the seller is related to the tenants. And so you inherit tenants, and that's a big deal for a lot of people that have full-time day jobs, and they get scared researching how to landlord, how to deal with people that've been there much longer than your own age. You know, you have to, what do they want? What does the seller want? Just have them say it. They usually hide it for everyone. Every seller for some reason has secrets. I don't know. They should even if it's bad secrets, it's actually faster and easier to sell it if you disclose.
Yeah, just be straight up.
How good or bad it is. People just don't want to buy something blindly. And that's all it is. If you just tell them there's, you know, mold, foundation, whatever, if you can calculate it, it will sell.
Yeah. I remember the second lesson that I thought about. The second thing was if you have the wrong agent market the property incorrectly, that'll hurt your bottom line. Like that example of you can find opportunities on the MLS. So that's a lesson for homeowners right there, that if you hire maybe an agent that doesn't know how to market that type of properties, it could affect your bottom line. But I love what you're saying about not focusing on that extra 1,000, 2,000, 3,000, because 10, 15, 20 years, real estate is a long hold. It's not going to make a big difference. For my 11 unit, it was $1,000 more per unit. I was like, if it's not worth $1,000 more per unit, I shouldn't be bidding on this property, you know? Yeah.
That's why you should stick with high equity generating places, so you don't have to worry about those tiny numbers that a lot of buyers get fixated on. It's usually something under 10K they get so fixated on, but yet if you just make sure you buy a place that's on the rise, if you don't want to buy a place on the rise, that's fine too. Just don't get fixated on tiny numbers. It really, in the end, won't make a difference.
Yeah. So what advice would you give to somebody maybe looking for a good opportunity in the marketplace? What advice would you give to somebody maybe buying their first property? They're first-time home buyers. They're nervous. They're scared.
Those two words right there was what I was about to mention. Don't be nervous or overwhelmed or scared, because anything of the unknown is usually good. Things that you fear is the ending thing about it. The things that you fear are actually, they turn out amazing.
The best in life are the most stressful. But, you know, and I think it's like, I'm not from Chicago. I'm from a small rural town in Southern Illinois. And moving up here, you know, people have things where, oh, Chicago, it's scary, or, you know, whatever. And that goes for any city. And I think that it comes down to, like, people are just people, you know, and if someone makes you feel nervous, say hi. And that's where I say, like, don't be scared of neighborhoods. Don't be scared of what the media tells you. Like, go drive through it, feel it out, feel people, you know, people, honestly, you know, some neighborhoods have had a poorer reputation, in Chicago has a stronger community, and you know who your neighbors are, versus a neighborhood that has a really good reputation. And at least in this city, is like each neighborhood you live in, it's the crime you choose to deal with. You know, each neighborhood has a different set of crime. And, you know, so that's where it's kind of these factors, like when you look at places, and I don't believe in, if you want a good deal, don't be scared to be a pioneer. That's it. You know, and when people see that you're working hard on something, they're going to gain respect for you, you know, and you're going to find some way to level and reason with people. And that's where, I don't know, I believe in taking risks.
Stage fright. You're going to have stage fright for anything you do. That's great. You know, doesn't matter what it is. The stage fright is there. If you're not,
I feel like a lot of people look at real estate as risky, but it's calculated risk, meaning that, like,
do your homework.
Yeah, you do your homework. Like, I'm not a fan of taking like just a blind risk, but like you said, if you know what you're purchasing, you know what's wrong with it, it's a risk. Yeah, but it's a risk that you know what is going on with it.
Yeah. Don't be afraid to talk to a lender's ear off, or a realtor, or even a lot of listen to podcasts. If you don't feel like talking to people right now, just listen to the world. It's there for you to learn. You know, we have everything at the palm of our hands now. There's no excuses why, as long as it's calculated, you've done your homework, and you see the numbers, and you can feel the numbers, not just see it, but you have to feel it. And then And then mind you, it's only overwhelming because these are typically 5-10-year plans, sometimes 20-year plans. Don't look at it as where it's going to happen immediately, and if it doesn't, then you fail. It's a long journey.
Yeah. How is music? So if I'm understanding this correctly, you basically have a house that the tenant pays for your entire mortgage now. You probably have a couple of other investments as well too that maybe add additional cash flow. Now, what has that done for both of you? Like having that, because I imagine like most people go to a job and 43% of their income goes to their mortgage. How has that helped you in your personal life? Meaning like your mortgage is being paid for. You have a place to sleep. Most people don't have something like that. Most people have a job, use the income from their job to pay for their mortgage. Something happens with their job, they're struggling.
Well, we believe in investing in assets versus liabilities, and that even goes with our tour bus, where it was in 3 tours, the bus pays for itself. You know, instead of us, you know, taking flights and staying in hotels, we'll drive and we'll get our gas covered and we'll stay in RV parks, you know, and so that's kind of the same route. I feel like we look at our residents. It's like, yeah, we do share walls with people, and maybe people have issues with that and they want to have a little bit more privacy. But I mean, I'll give you my privacy if you're going to pay, you know, I can live here for free.
Yeah.
So
with our other property, you know, that's the extra on top of, that's just for standard living expenses. But it takes quite a bit to get to that next, to the first, second, third, and then once you get to, I don't know what number, depends on your lifestyle, but you'll be there. It's just, you know, you just have to make sure that your expenses are caught. You know, do your own property management. There's a lot of tools out there it's a lot of apps out there that are really reliable with managing properties. It's not very difficult. Don't get scared into landlording or building. A lot of people get scared to pick up a power tool. It is deadly, you know, just do it. I mean, you can save a ton of money. I mean, just a room to frame it is going to be maybe 1-2 walls, maybe 4 walls, like $800, depends. You know, drywall can be just $250 for just one ceiling. You know, don't be scared. Rent the drywall lift, rent the concrete mixer, you know.
But especially once we're done with the place that we're working on right now, it's as looking at, you know, at the cap rate and everything. And that's where Kristin's really good at, is, you know, the cap rate and how much we need to save for amortized costs. But the minimum we're going to make a month off of just this one other building is like a minimum of $2,000 of cash flow, you know, and that's, and there's a lot of factors that can go up to like over 3. So it's like in that way, you know, we're excited about, like, we have kind of this 5, 10, 15-year goal that, you know, our next building, you know, it's maybe we want to go a little bit larger, maybe an 8-unit and go commercial. And then in the end, I want to buy an RV park. I think it would be great to retire on an RV park that we go to during the summer.
Years,
yeah. You know,
and keep with investments you truly enjoy, because you're going to go over there and mow the lawn yourself with pride.
Okay. So let me ask you this. Where do you go for education? Where do you go for real estate education? Like what type of mentorship have you guys had? What type of coaching, if any?
I'm a big fan of just emailing my managing broker every time I have a random question. I did a lot of networking events, just talking to agents and lenders. I do that all the time. Biggerpockets.com is another fun website.
When we build, we'll listen to podcasts.
If you bump into it, if you're looking up something to do with Chicago code, you just bump into it. And the city, actually, your city website will have programs that are giving grants to neighborhoods that may need, you know, help fixing up. There's lots of information and just straight up your city's website.
Yeah. There's Facebook groups, YouTube.
Yep.
You know, you know, we had actually recently joined another group. It was a landlording group, and it has been extremely helpful. And just seeing the situations other people are in and the solutions other people are offering. Right. It was like, I mean, it's,
what do you do when your tenant flushed down flushable wipes and cost $5,700? You know, just like that. You can talk to people at any point in the day, and on Facebook, you will have 50 people answer your question within a minute.
Yeah, and just continue your education forever.
Join real estate groups. They're really knowledgeable. Everyone, you'll get, it's almost becoming better than Google. I mean, because Google's, the first 5 pages are all paid for. So if you go to a Facebook group, your question's answered with 50 different opinions.
Yeah, and that's the benefit of the internet now, that there's no excuse for somebody that wants to do something not to do it, because the information is more readily available than any other time in history. Meaning, if somebody wants to learn how to invest in real estate, the information is out there, and you can literally do it without having to invest a huge amount of money. The last question I just had for you girls is if there's anything else that you'd like to add on to the interview, if there's anything else that you feel, or wait, I forgot one thing. I wanted just to chat about, so you're going to have $3,000 in positive cash flow. You have your mortgage paid for. It's allowed you to chase your passion basically now, which is music. And I feel like for a lot of people, they don't have that liberty of being able to do that, just because they value a little bit more of their privacy versus the freedom to be able to do what they want when they want. How has that allowed you to chase your passion? Like, do you guys go on tour? What does the music thing look like? I know we didn't dig into that, but
well, we don't have to wake up in the morning like most folks. That alarm clock, I don't believe in that. We should not be waking up to alarm clocks. Should not be allowed.
Yeah, I mean, especially it's kind of like, you know, when we came out with our album in 2020, we pressed it on vinyl. We had Tom York's mastering engineer cut the lacquer, master it, put it in half speed, you know, lacquer cut, you know, the special cutting technique to get every sound in. Got America's top record pressing plant to press audiophile style. And so the point of this is, especially when it comes to like kind of real estate in that way, like when you go through and you are the ones that are doing quality control and creating a holographic cover and every little point of it, you know, that's what you're giving as like a rental unit. So for us, you know, we call them VORs, they're vacation tours. We'll go and we'll get all of our gas paid for and with a little bit of extra, and we'll do a lot of hiking and we'll go to thrift stores and
we exchange privacy for I guess freedom with the lifestyle that most people don't have, which is you have to be somewhere at this time every day, and it can be routine. We hate routine. It drives us crazy. We would lose our privacy to have a different day every day.
There's always, I think what the point is, there's always routes to figure out that for us to be able to travel, we figured out like we have a service we give and it's music, and people pay for our vacations, you know, and pay for us to travel. It's the same thing with the house. You know, it's like, I think if you really start to look at things as like assets and liabilities, you know, I've seen a lot of people like, you know, we've been together as romantic partners for almost 14 years. We're not married because we didn't see it as like, it was like, wow, this is really expensive. Let's buy a house first. Well, let's buy another unit first. Let's get like 100% financially stable, you know, because it's like people go out and spend 30, 80 grand on weddings before they buy a house. You know, we just didn't see that as logical, you know, and it was like, well, I'd rather own property and have a cash flow coming in.
But, you know, with the privacy issue, in a way, if you don't think of it like that, you think of it more of a product. A rental unit is a product, and you'd be proud of that brick that you expose and sealed, or you'd be proud of the countertops that were $2, but yet it looks $2 million, you know. And then the person that you rent from, don't think of them as the troublesome tenant. Don't just expect the worst and then prevent it. Remember, realtors are like fortune tellers. They can tell into the future. So you'll know exactly what's going to happen with a future tenant. And
don't get upset over wear and tear.
Prevention is key. Mm-hmm. And yes, don't don't just budget costs like the $5,700, you know, tampon in the toilet. Who knows? You have to budget correctly. Use your formulas, you know, as a guide for the amount that you're setting aside for maintenance and, you know, issues, any kind of issues, or a future replacement of a roof, you know.
One thing that's always helped me is like, I always think about it as everything's fixable. Yeah. Even if the place burns down, it's fixable.
If a tenant
that's it.
doesn't like how loud you are because they're playing too much house music, warn them ahead of time.
And give them cheaper rent and say, hey, I might get creative at 5 a.m.
Or if you get someone that's, then I don't know. I guess you should stick with single family for just get your plan in the future for your own single family, but yet have other rentals where other people are living next to each other, because the city ordinance will take care of the noise issues and noise complaints.
Yeah. Yeah, it's awesome. Well, I've enjoyed the interview. What I loved about the interview is just the positive mindset, the positive attitude, meaning that like uh, you've set certain goals and you're working towards them, and you have an attitude of like, hey, we can do this. Yeah, it may not be that easy at times, but we can do it if we just sacrifice a little bit. And that sacrifice, because you didn't, at least it doesn't sound like you came from a family that has multi-million dollars. You basically earned your way to where you're at, which is awesome about that. So last thing is, if somebody wanted to find you, maybe get to know your music a little bit better, or even get to know your story about real estate, where could somebody go to find you?
At Danceloud Music on Instagram, Facebook, what is it, YouTube, we have a Vivo, Spotify, all that.
And our website's danceloudmusic.com.
Yeah, and we're always down to meet people. So if anyone ever has any question about anything, you know, we did it all ourselves, every part of the way. We've never accepted help or even had the help if needed, you know. So
if we tried to hire help, we think we might do a better job. So we end up doing everything ourselves, because if it's not done your way, you better do it yourself.
Research until you're confident. You got it.
Yep.
Yeah, awesome. Well, it was great to have you on the podcast. Thank you so much. To all our viewers, if you've enjoyed this interview, this was episode number 77 of the Morales Group show. We had Danceloud Music. We had both Kristin and Desiree. So thank you so much. And
thank you.
We'll be in contact.
All right.
Yeah.